Hey everybody, welcome to Stock Markets with Bruce. I've got a video today about Carnival Cruise Lines, what is going to happen to the shares of Carnival and Royal Caribbean and Norwegian, and I have a story about Tesla. Oh my goodness, we got stuff. Thanks for following my channel, everybody. I really appreciate you guys subscribing to Stock Markets with Bruce. I really appreciate the thumbs ups, and leave me a comment. Tell me what you think about my videos on this channel. Tesla making more news today, which I'll get into in a few minutes. And it's not the kind of news you would normally think about. I mean, you know, normally we talk about Tesla with how many cars they're selling, or what's happening with the short sellers out there who got caught selling against the tide of movement on this stock. No, we have something else to talk about. I'll get to that in just a second. A fascinating story indeed. First of all, Carnival. I got to talk to you about Carnival. My gosh, they posted $4.4 billion in losses for the current quarter. That's March, April, May of 2020. They only had 426,000 passengers on their ships for those 3 months. Last year, 3.1 million passengers. They've got $6.9 billion cash on hand. They're going to need it. They only had 581 last year at this time. But look at the chart of the stock there. You see that 1 month performance. This is an opportunity. If you haven't done so, get out. This is your chance to sell at a bit of a pop. I don't know how much upside there is from here. Norwegian, same thing. It bottomed out around $15 a couple days ago, $16.35. I can't understand why these shares are up. The rumors on the street are that even Royal Caribbean, by the way, popped up $4. Rumor on the street was that bookings were up for 2021. Well, yeah, no kidding. Of course, bookings are up for 2021. Everybody who got canceled in 2020 booked over to 2021. But what they don't talk about is how many people are not going to be able to go cruising in 2021 or 2022 because these ships that you look at this picture, there's not going to be that many people on board the cruise ship anymore. They're not going to allow that many folks to be squeezed in. Look at these pictures here. This is a picture of a Costa ship called the Costa Victoria. Carnival dumped it already. They sold it. Here's a bunch more. The Pacific area, the P&O area, the Dawn, the Costa Mediterranea, the Oceania ship on the bottom right. These ships are all been offloaded by Carnival. They're offloading now 13 cruise ships from their cruise lines. They have 9 different brands. 13 ships are gone, including this one right here. Some of them are going to other lines, and a bunch of them are just going to be scrapped. There is no way Carnival will ever make the kind of money they made last year for a long, long time, with restrictions on how many people you can have on board a ship and what ships are left. I just don't see them making that kind of cash. Okay, now let's talk about Tesla. The shares of Tesla, if you're following the markets, have really zoomed in the last few months, and they're now at record high levels. And here's something that a lot of us don't think about every day, but the reality is that the value of Tesla is now approaching $300 billion. If you take all the shares that are out there, divided by or multiplied by the stock price, you come up with a company worth over $300 billion. That qualifies this company to be included inside the S&P 500 index. And when it comes to the 500 index, there are a lot of investment funds out there that you can buy into, that will reflect the performance of the S&P 500. So instead of having to buy, one share of every company in the 500 index, you just buy shares of a ETF that mirrors the performance of the S&P 500. Check this chart out here on the left. This is a 1-year chart of Tesla. Last year in July, it was in that 400-500 range. Today, it closed at $1,544.65, up $150 today, because the word got out that Tesla is likely to be included into the S&P 500 very, very shortly. Here's a second chart. It's only a month old. The stock, when it hit 1,000, that was a novelty. We didn't know if it would last back in early part of June. But here we are, July the 10th, and it is now $1,544. Well, the shares went up $150 today because of the rumors of the S&P 500 inclusion for this company. The bottom line is, if you are a manager of an ETF or a mutual fund and you're trying to mirror the performance of the S&P 500, you have to drop any shares that are not in the S&P 500 when they make adjustments, and you have to add shares that join the S&P 500. So if Tesla comes in, someone else comes out. One stock will be sold off and Tesla will be bought up by all of these funds. But here's the trick of it. If your mutual fund is worth, say, $300 million, I'm just picking a number, and you have to acquire enough Tesla to make an integral part of the S&P 500, in other words, to mirror the movement of the value of the S&P 500, this company here at $300+ billion will be one of the more valuable companies in the index. It'll be one of the top 30, 50, and you're going to have to buy a bunch of stock. And so will every other ETF mutual fund out there, which means there'll be a run on the stock. There'll be a run on free trading stock into these funds that are going to be desperate to add the stock into their portfolios. The short sellers out there, if there are any left, they're going to lose even more money because there are just not going to be enough shares to go around. And that is what the street was betting on today. The street was going, oh my gosh, they get into that S&P 500, the shares are going higher. Well, they went higher. They went up today by 10%, but the company wasn't added into the S&P 500 today. That could happen next week sometime. This is just in the anticipation of the company being added into the S&P 500. It's an unbelievable story. A self-fulfilling prophecy is what it is. Self-fulfilling prophecy. Anyway, there's the story on Tesla, and there's your story on Carnival, Norwegian, and Royal Caribbean. I don't think that the cruise shares can maintain the upward movement much longer. I really would not be comfortable being a shareholder in these outfits because they're not sailing for quite some time, and they're not going to be sailing anywhere near capacity. So the ability for these cruise lines to stop the bleeding and to actually turn a profit is a long, long way off. And the shares are, I think, just too high. But that's my personal opinion. It's up to you to decide what to do with your money. I hope you enjoyed this video today. I hope you found it informative, entertaining. Let me know if you like it. Give me a thumbs up. And if you have a comment, please leave one down below. I'd love to hear what you think about my videos. Please subscribe to Stock Markets with Bruce. Tell your friends. And we'll see you next time, everybody. Have a good one. Bye for now.